Gentleman Market, Anthony Borsellino. Sal's over there in the corner. We're gonna get him on. He's only got a face for radio right now. We're gonna get him all. Gonna get you all cleaned up over there, Sal. All right, and Chris will be here later, and everybody else is scattered around the country, right? So, anyway, to recap yesterday. We talked about how I thought the market could return to that 81 half, 81 quarter, because that's where the rally began yesterday afternoon. And I think that after we started trading lower, I actually put out yesterday on Twitter, you can stay short as long as the market stays. I think the number was 89 quarter, and the market trended down. And then I think with the tragic attacks in California yesterday in San Bernardino. I actually know where San Bernardino is because that's where Loma Linda Hospital is, and I was treated for prostate cancer there. So anyway, 9 years ago. But anyway, this whole I think that the attacks and the unknowing certainty if it's tied to ISIS or not exasperated the move down yesterday. So I think that also was an issue with the market moving down. Right behind me, as you can see, Mr. Draghi is speaking and not painting a very good picture for Europe. Growth at 0.4, 0.4, 0.3 in the last quarters, and also inflation at 1% or less. So he's being grilled. The markets did not. We were up about 1,200 points, and then we broke on the Draghi speech. Now, that being said, jobless came in like right in touch, right?
Yeah,
right in line. Okay, all right. So the jobless claims came in line, and then at the end of the day, also we got tomorrow's unemployment, and so. With Europe being in a fragile situation right now, and with Draghi basically saying he's doing more quantitative easing, and they will be like the United States. They will own a lot of bonds and a lot of assets, and the central banks own all these assets. Oh my gosh, I don't know what's going to happen if we ever have to liquidate. Well, we'll see. Anyway, back to the market, and I've said this a couple times. Sometimes I don't really believe, when you look at technical analysis and the markets move, I don't know what moves it. Does it move because, it's history and there's high volume nodes, low volume nodes, and it just so happens that the news events stop at these different events and stop at different technical points along the way. I don't know. At the end of the way, I don't believe that the markets trade rationally all the time, and that's why there is no holy grail out there, right? So markets are actually kind of rebounding now. The U.S. equities, I think that we're going to get a two-sided trade based on the action we've had the last 2 days, and then also on the fact that we've got the big unemployment now. So the U.S. Fed and Janet Yellen have a problem. The problem is if Europe is going to do quantitative easing and lower rates, and we raise rates, that's also going to put a run on the dollar. So the dollar will become even stronger, which will hurt some, the multinationals, but also the strong dollar will hurt the euro, right? And there's people that have made big bets that the euro will be at parity by the end of the year. So we'll see what happens with that. All right, I think we're still like at 105 right now. So let's go to share the charts. Good news, everything will be out next Friday, okay? The trading funding program will start on the 1st of the year, but all our new indicators and all that will be available on NinjaTrader next Friday. I know people have asked, we will have other platforms that will be supporting, as well as other people that will be contributing through research on the site. So very excited about the site coming out and so on. And also the documentary coming out. So, all right, let's go to share. If you got questions, get them into Anthony. Anthony, questions yet?
Nothing yet.
Nothing yet. we've got a very smart group of people. They don't need to ask any questions. All right, so let's go here. All right, so let's just point out a couple things that we have to look at, right? So yesterday,
I have a question.
Go ahead.
Louis, did you shave?
Yes.
Is that a clue on the Fed rate decision?
No, I shaved because no shave November is over. That's why I do it, because I had prostate cancer. But I did shave. This is the real me, the real, the good looking me, right? All right. So back to the charts, right? So the Fed comes out, or the Draghi gets up there, makes his speech. He makes this. We break all the way down to 2072 here. All right. Prior to that, we were trading up here, right? And which was yesterday's mode was a 2095. Okay. And then we broke all the way through there. Now, remember, I was talking about that 81.5 yesterday. All right. Because I thought that that's where the market would, let me go back here and I'll split it for you. Okay. All right, right here. See how I put this split right here? Okay. I'm going to let me throw a line in there so we can take a look at it. Let's just leave that big, big blue line, all right? So that was where the rally happened, okay, that's where the rally happened from on the afternoon on Friday, right? Remember I said right here, I'm sorry, right here, this J, I split it. So right here, you see that's J? That was the low on Friday. I had thought yesterday that the market could retrace back to this area. And I think, and this is the time when the shootings happened, and then we ended up we kept going, right? And so then the market kind of consolidated. We rallied back up this morning, and we went and we topped out at yesterday's mode, right? Just about 3 ticks above yesterday's mode at 95.25. And then Mr. Draghi came out and he started talking about conditions and quantitative easing in Europe. So I think that this is going to be an important area again. This right here, this 88.25 that we're talking about, and I think we're going to get a two-sided trade. Now this is, this is now causing a problem for us, right? And I also talk about how during the regular trading hours, so all the stuff that we look at overnight, as far as I'm concerned, is great. And it's a nice thing to look at, but remember that the U.S. equity markets are closed, right? So I always want to see the confirmation of these single prints. It'll be nice that these will all be filled in during the regular day, right? Because these were all single prints left yesterday, right here. Okay, so when we fill these in during the regular trade, I'm looking at bracket K. Now you don't view them as single prints anymore, but I do, because these were made during the regular trading hours, okay? So that's an important distinction I always look at when I'm looking at single prints when it comes to profile. So we're, we've got our bull bear zone at 81.5 today, right? So we're actually trading right there. And then this will be the next key to me. Will we get above this right here, this 88.25? And then ultimately, do we get back up in here and take out this? We've got some little single prints right here left from yesterday, right there at 96.75 to 97.25, right? So it's always key. You got to take out the Globex high or low either way, and then it would, be that will pave the way to the rest of the day, right? So there's a lot of noise in between there and now. Then and now, right? So we got to be careful about the noise. All right. So going back to the charts, the way they look, I'm not going to draw these in anymore because these will all automatically. We got the high here, 2095.75. You can see it right there, right? Okay, so that's the top value. All right, I've got to put our new updated charts in here that will paint these automatically, but there's the bull bear zone, 2081.5. We're trading right around it, okay? And then we've got the point of control at 2078.5. And then we've got the value area low at 2075.25, 2570.25. So kind of sitting in the middle of the range, all right? Now, this is going to be an important distinction because everybody, has different ways that they become comfortable with, right? So I look at the market right here, okay? And I'm looking at a 5-minute pivot that's in a sell, okay, right now. But this is based on the 24-hour day trade, right? So these are the pivots in the 24-hour trade. If I go here, and this is what you're going to have the ability to do with this, is go here. I go to our indicators. Oh, I'm sorry, not indicators. I'm going to shut that. I'm going to go here, all right? I'm going to go to data series, and then I'm going to go right here, and I'm going to change, all right? And I'm going to go down to regular trading hours, US Globex Index, RTH, regular trading hours, right? And then, okay, that's going to repopulate. Sometime today. All right, there we go. All right. So now everything I've put in, okay, so we've automatically put our S1, S2, okay. So this is RTH, regular trading hours, okay. So all these things will work for us now, okay. We still got our, does it look like it? Hold on a second. Let me make sure that RTH, US Global Index Futures, RTH. All right, we're in there. Okay, cool. All right. So we're trading right here. We've got a 5-minute pivot right here at 2087.75. Okay, our bubbles are starting to work, but I have to put the latest version in, and they will all be working correctly. Okay, that's going to be Anthony's going to do that for me today. The bull bear zone will then come up automatically like it comes up here, okay? So, and then these green lines and this period between this green line and this red line is what we look as the counter trend period. So if the market's going to make a bottom or a top, we kind of look at that area between, what is that, 8:15 to 9:15, right? So we look at that, I'm sorry, 9:15 to 10:15. So these are the counter trend periods, and we've marked them on the chart so that you don't forget about it, right? And you kind of look at it and see what's going on, all right? So once again, the value high is up here. We're trading right above the bull bear zone, 81.5, okay? If I bring down the sisters, okay, all right? Everybody's trading side value. Here's the Russell, 5-minute pivot is there, okay? All right. I've put in the value areas. You'll be able to do that if you follow them. I like to look at these, right? And everybody seems to be trading right at their bull bear zone in the middle of value, okay? Yesterday, the NASDAQ was the lagger, and it was stronger, and it was trading above value when everybody else was breaking, okay? Same thing, middle of value, okay? There's the 5-minute pivot and a sell. And here is the bull bear zone for the NASDAQ, okay? So I put all these things in here because I want to get consensus. I want to see the market and the market's making consensus so I can make intelligent trade smarter decisions, right? That's what the site's about, education and to trade smarter, right? So same thing with the Dow right here, okay? It's actually sitting at its bull bear zone, okay? It's 17, this goal line here. So when you get in the funding program, we'll teach you how to calculate your own bull bear zone and look at different breakouts and so on, okay? So we've got Draghi's still talking here. It looks like he's smiling. I don't know what he's smiling about, but I guess he's a happy guy. All right. So that's what we got going on in U.S. equities. I think that we're going to have a two-sided trade. I'm still favoring the upside, people. I think the market is going to be resilient. And even if she cuts the rates, she has absolutely put everybody in a situation to believe that everything is okay. All right. All right. Here is gold. All right. Gold. I got the bull bear zone here. Gold 2052.20 made a low overnight in the 50s. Okay. And like I said, if she cuts the rates, I think gold is heading down to $1,000. Right. So here is the bull bear zone 2052.20. We're trading at the bottom of value right now, which is 2054.90. Okay. All right. So these are all things that you'll be able to do. And if you're a gold trader and want to put positions on, all right, let's go here. CL. All right, everybody. If you've been following me, you know I think the oil is in trouble. It dipped below $40 yesterday. They're trying to get it back up. We're trading at the value area low right here at 40.39. I've got the bull bear zone at 40.32, and I've got the point of control here at 41.36, and then 41.67. Okay. Sometimes on the site you'll get some different numbers, but that's because I do my stuff early in the morning and I just don't coordinate. I'm only a few ticks off, but you know what? Oil is, not looking good right now. Just not looking good. Got any more questions, Anthony?
Yeah, we have, all right. So are those single prints typically made by short-term day traders only?
I don't think they're made by the day traders. I think they're made by the algos, because to get a single print forced down like this, all right, it means that there's a lot of volume coming in and going one way, right? If this was caused by a lot of selling and not enough buying to cause a two-sided trade. So that's where I think those things are caused. Any other questions? All right.
He said, big money would not be able to get out so fast, therefore a good chance price will push back up to protect their positions.
Well,
in terms of goes along with the single print question.
Well, so if you buy into the theory that the market has equilibrium and the market gets thrown out of equilibrium by who, right? It gets thrown out of equilibrium by the big global players, right? So the institutional trader are long-term money, okay? And so when they need to get into the market, all right, and they need to get in and they need to get out, they're the ones who cause the equilibrium shifts, right? And they throw it out of equilibrium. And so you take a look at, right, you had all this selling, right? And then what happens overnight when you get the consolidation? We kind of consolidate and we move back up, and overnight we cover the single prints. And this is where you're getting consolidation, two-sided trade, and so on, right? This was yesterday was a big player who was forcing the market, because if you look down in bracket, let's just separate bracket K. All right, let's go. I'll separate right there. Let's make the split. Okay. All right. So if I separate bracket K, all right, and let me separate L also. Make a split there. Okay. All right. So this guy forced the market all the way down, right, with a single print. Okay. And then bracket L opens up. There's a little bit of a breath. Okay. And I'll just do it again. Split. Okay. Oh, I hit the wrong one. Sorry. Split there. Come on. So bracket K, right? You can see it here. This guy forced the market all the way down to 2081.75, right? Okay. And then bracket L opens up a little bit higher, and then bracket L, this guy's still in. This is still, right? This guy, then they forced down to 2075.75, right? And then, we have the last 45 minutes of the day, right? The last hour and a half of the day, bracket M, and so on. The guy was done. They were done. Those people were done selling, okay? And then we have the overnight consolidation. So I think single prints are caused by big buyers and sellers, that are in the market. Let me go and merge this right. Merge this back. Okay. So I don't think they're caused by the retail guy. They're caused by big institutional guys. For some reason, they want it out. Maybe they knew that the Draghi speech was coming. Maybe this is somebody or an institution that's lifting a position or hedging a position. Maybe it's an institution that is fearful that the rate cut hike is coming and it will be negative on equities. You don't know, right? But this is opportunities for us. When you see single prints clause, that there was that there were big institutions that came in and pushed the market. Like this selling here was a low volume. This was low volume. I mean, a bigger volume player that came in to force the market here on the Draghi news. So hopefully that answers your question.
Yep.
All right. Okay. All right. So we're trading sort of in the middle of value above the bull bear zone. I think we're going to get a two-sided trade. Let me see if I can see the, because I kind of got this all split up. Let's see what the TPO count is overnight. At 270, so at 457. So you see up here, that's where we get it. Keep an eye on this screen, the gray. I'm going to put it on our cluster from overnight. So we have a TPO count of 457. Okay, from the high to the low, we got 279 sells and 164 below the median. So above the motor, below the motor. So so there were more sellers. But if we go, we go here on yesterday's action. Okay, and I got to put that whole back together. All right. So we go here on yesterday's action. The TPO count was, let me see here. So we had 322. We had 215 buyers to 101 sellers on a 322 count. So those are kind of things that you got to kind of look at, because the market gets rebalances, constantly rebalancing, right? So, all right, 8:23. We got to get moving. Good luck today. Stay with us on Twitter, and no casino girl. I was not signing autographs. I was busy getting things ready for the site launch yesterday. So we will stay up with the Twitter, and and then when the new site comes out, and for our followers, there will be the ability to be in our chat room, during the trading hours. So, all right, everybody, talk to you later, and good luck.